A very good morning to you, ladies and gentlemen. Thank you very much for joining us on this beautiful Thursday morning. It is the 8th of August 2024, and welcome to the Make Autos Attractive Masterclasses that we have instigated in 2024 as part of our intention as naamsa and also as the automotive industry to begin to have conversations that are going to truly help us to attract young people to consider joining the automotive industry as their choice of career. My name is Michael Mabasa. I'm the Chief Executive Officer at naamsa, the Automotive Business Council. We want to take this time to thank all of you for making the time to join us this morning. For many of you who may be aware and who joined us during this session when we launched this series, we are running a 4-part masterclass program where we are going to be interacting and talking to a number of industry leaders to be able to give us some insights in terms of the work that they do, and also to get an opportunity to interface as well with some of the leading industry executives across the industry who have succeeded in their careers. And we are very, very happy that this series of masterclasses is dedicated to a very special man, Mr. Brand Pretorius, who has contributed immensely to the automotive industry for many decades. Brand was obviously our first guest in our series 2 weeks ago on the 25th of July, where we interacted with him and where he also got an opportunity to share a lot of information around his career and also gave some very, very invaluable advice to our young people and also to our existing leaders in terms of how they need to go about in managing their careers going into the future. So we have 4 different masterclasses. This is the 2nd episode in our series. And we're very, very pleased that we have been able to bring very exciting colleagues who are going to be joining us. And I will be introducing them later on during our discussion this morning, so that we can be able to listen to them and obviously hear their thoughts in terms of the role that they're playing in the automotive industry, as it were. We also want to remind you that Brand is an author of a very renowned leadership book called In the Driving Seat, and we have made available 100 copies of his book to those who are joining us in these masterclasses. So please, indicate obviously in your registration so that we can be able to confirm, and 100 of our attendees will obviously win this renowned leadership book, In the Driving Seat, that Bram has indicated and also written some time ago. For today, ladies and gentlemen, we are very pleased that we have with us in our call 3 guests, and I'll introduce them as we go along. And I want to take this time to introduce my first guest, and I'm going to request him to turn his camera on. And his name is Mr. Ghana Msibi. Ghana is the Chief Executive Officer of West Bank. And West Bank obviously needs no introduction to many of you. It's one of our very important partners in the automotive industry for many years, and we're very pleased that Ghana, who is currently on his annual leave, was very gracious to make the time to come and join us this morning in this particular conversation. And we are going to be looking at a number of key issues, and we are also going to try and get into the life of the man himself. And we specifically chose Ghana because he's obviously a very young man, and he told me and confirmed that he's happy to also share his age today for the first time in a public platform, so that he can be able to inspire young people, because many of you are young people who are aspiring to be leaders in your own right, in different universities across our country. And I think when we work with a person like Ganam Sibi, we are all inspired that young people can be able to reach to the very, very top. So the masterclass today is going to explore a number of areas because our topic for today is around global ties, the interconnected dynamics of the South African automotive industry, and global developments. And we are going to be looking at this topic from different angles. And my two other guests that I will introduce later on in our conversation will deep dive specifically on this particular topic, and will present some of their thoughts in terms of what they think around this particular topic, because the world is changing very, very fast, and we're very pleased that we are able to bring them into our conversations. Tatem Sibi, welcome, and thank you very much for making the time to join us this morning.
Yeah, good morning, Mr. Mabasa. Good morning to your guests. And I have indicated on my registration that I'm keen on the book. So please just take note.
Fantastic. Fantastic. That's noted. Thank you very much. Ghana, thank you very much for making the time to join us this morning. And as I indicated earlier on, we're also very grateful that you took the time off your family time, because we do know that you are currently on leave. And that's really a testament that you are committed to supporting this industry, and we are not taking for granted the fact that you have taken time off your personal time to join us this morning. Let's start off, Ghana. I think a lot of people, the first question that normally when they look at, and we'll get to your background and where you come from, where you were born, and so on. But the first question I really want to ask you, it's around this name. A lot of people say this name looks like a name of a country. Tell us, how did you attract a name like Ghana in your in your ecosystem? Just share with us the background around your name.
Yeah, so it's actually a very interesting story in that my great grandfather was exiled into Ghana. And unfortunately for him, he was subsequently assassinated in Ghana when then my uncle, I suppose in English, everyone is uncle, but in Zulu would say Wagumnanwam was born. And he was then named Ghana. And I suppose since then the family has tried to keep the name alive in remembrance of the old man. So I have, of course, then became Ghana, and then my son is Ghana, and hopefully we can as a family kind of keep the name alive. So that's really been the story around it.
So technically you Ghana Junior, or Ghana Senior, because you now have a son, Ghana. So how do you stack it up?
So technically, because I am the eldest living Ghana, because the other Ghana is late as well. So I'm Ghana Senior now.
Okay.
Cool. Yeah. So just to put it on record, as you refer, Ghana Senior. Let's be clear.
All right. No, fantastic. Thank you very much for that. But and just tell us about your background. I mean, where were you born? Obviously you are a South African, so that's clear, and you're not from Ghana because you are called Ghana. Just walk us through your family history. Where were you born? Where did you go to school? And obviously that journey up until your matriculation and also your academic journey.
Yeah, so Mike, I mean, it's another South African story, I suppose in many respects, very similar to a lot of us. I was born in what was at the time Baragwanath, Chris Hani Bara today. So I was born in Soweto in Diepkloof in Bara. We at the time lived in a township called Mufulo North, to be specific. We've moved around quite a bit. My parents, until very later on in their lives, were renting. And I suppose that was quite common at the time, considering that they weren't born in Soweto. So they kind of had come to Joburg for better prospects. So we rented quite a bit. I mean, we lived across Meadowlands, Tladi. Like I said, I think we also were in Diepkloof. Ultimately, then they were able to procure a property in the mid 80s. There was a new development at the time, which is now an established township called Protea North. We settled there for quite some time. And yeah, I think later on in life, unfortunately, the two of them decided to go their separate paths. I then, with my mother at the time, was still young. I think I must have been what, 11, 12, if that. I suppose then that's probably where my affection with engines started. We moved to Jules Street in Malvern. So that's where I then resided. Yeah, so until I subsequently moved out of home at the time for my own kind of venture into trying to live a better life, I suppose. From a schooling perspective, I studied in Soweto. A large chunk of my schooling career. I changed schools quite a bit. And I always say to people, I was I was highly misunderstood, is my story. I wasn't
Yeah.
naughty. I wasn't naughty. I was highly misunderstood as a child. And so I found myself in a lot of trouble growing up. But I mean, I went to Lekang Primary, Kutala. I then subsequently attended a school in Lenasia. And because of my supposed high activity levels, I ended up at it was called 21 Battalion. It was an army school for discipline. And, and yeah, I think that's probably where a lot of the discipline had to kind of get instilled. Um, and subsequent to that, I matriculated in Bedford View War School. It's an African school in Bedford View. And then I went into, at the time, what was still called Vets Technicon, which is now UJ. And I think that's when I did my undergrad, my postgrad, and subsequently I just kind of did a few other stuff after that. So that's really just been my journey.
Hey, fantastic. Very colorful journey indeed. And obviously, you are a banker today, Ghana. And I'm sure a lot of people would love to hear how you gravitated, into, banking space and what inspired you as you were growing up. Was this something that you were thinking about as you were crafting your own path from a career point of view, that you'd end up in a bank like West Bank?
So it's an interesting one in that even my team will tell you I don't see myself as a banker. I see myself as a solutionist who happens to be in banking. That's what I do. I solve everyday problems and I work within broader ecosystems. Because even today, my role isn't about solving what you would call traditional banking issues day to day around solvency, liquidity, etc. I mean, I deal with automotive issues. I'm an extension of the automotive industry more than I am that of banking. I happen to be in a bank. I happen to work, with bankers. But I think, I see myself really more of someone who's in automotive. Um, Now, you asked, is that how I saw my career? And the answer is no. The answer is no. I think I got into automotive as most people by accident. I was in insurance for the longest time, and an opportunity was presented to me to look after in kind of the automotive insurance vets in Holland at the time. And I had thought, okay, listen, this is probably a good stint just to go and see what this automotive thing is about. And as they say, the rest is history. Very addictive. And yeah, I suppose through that journey, I fell very deeply in love with the industry, with the people. And it's been 9 years, well, 10 years now to be exact. Yeah, 10 years this year, September, in counting. And yeah, so just time flies, yeah.
Yeah. No, fantastic. And in your role currently, what would you characterize as some of the challenges that are currently on your desk that are keeping you awake at night?
Yeah, so park all the issues I have to deal with in the media with Mr. Van Sale and RT46. So park all those. Those are I deal with those when I'm already awake, right? Um, so the reality of the matter, Mike, is because of the vastness of the portfolio in that we operate all the way from having to grant credit to having to locate and dispose of vehicles. It's quite vast. And so with the economy where it is, I can tell you, the one thing that keeps me awake is the extent to which call it the credit capacity that we've deployed has been deployed in the right spaces, at the right return, as far as the shareholders are concerned. We're a data and a tech business. Again, I'm adding color to this bank. You can see that I'm trying to not be a banker, but we're a data and a tech business, and it's about making sure that the tech is on point. We have to always be on, and I think it's about equally being able to aggregate and disaggregate the data, such that we are able to price correctly. The other elements that I think probably keep me awake is it's this environment. I'm big on culture. I'm big on just identifying as human beings with where we spend a lot of our time, which is this work environment. And I'm quite big on people almost finding the best versions of themselves. So I think that always keeps me awake, especially in this new hybrid world. I think for many individuals on the line, they'll probably say, listen, it's great to work from home and it's fantastic. The liberty is great. But the truth of the matter is that when you have to be accountable for culture, when you have to be accountable for continuity, for how, for relations, just the relationship dynamics, it's a very different complexity. So there's quite a few things that one would argue that, at the face of it, they may seem to be aesthetics, but for me, they are real core issues of identity. Do individuals walk in every day and they identify that this is where I want to serve? This is where I want to provide discretionary energy. Is this place home? Is there enough developmental opportunities, and so on and so forth? So it's really a wide array of things that I suppose you sit. I mean, there's risk issues, and those are all in the normal course of business, where you would sit and kind of say, okay, listen, we don't trip on audit issues, we don't trip on fraud, etc., etc. But I think these core pieces for me is just around people, culture, tech, data, and just the core turning.
Oh, fantastic. Good to hear. As we continue with our conversation with Ntate Ganamsevi, I'm going to invite, obviously, our guests on the line. If you do have a question for Ghana, we do have a Q&A functionality on the chat, as you can see on top of your screens there. Please feel free to pose your questions so that we can be able to get those through into this particular conversation as well, and get an opportunity to also at some point, I think I will give you a hint where you can be able to raise your hand as well. And once your hand is up, we'll also be able to activate your camera, and you can also ask your question to Ntate Msevi during our conversation. Ghana, as a Kasi boy, as someone who grew up, born and bred in Soweto, there's a school of thought from many of our township, let's call it blue-collar employees and people who are currently working in different settings, who are saying that access to finance, particularly for them to be able to buy a vehicle, is a challenge. Banks like West Bank are not, providing them with an opportunity. Their applications have been scrutinized very, very heavily. They are requested to submit a huge amount of documentation, obviously private and otherwise, and yet the applications are not approved. How do we, what's your thoughts around access to finance as a concept, and how do we begin to demystify and address this particular issue where people actually feel that banks are not, as open as they claim to be in lending their money to, people who want, credit. Your thoughts there?
Yeah, Mr. Babasa, it's a very important question, because I think it I suppose anchors itself on this topic of financial inclusion. And it's a topic that I think we grapple with because there are a number of considerations that as banks we work within certain rates. So one is it's a highly legislated and regulated environment. And so the extent to which you are able to grant credit is within the parameters of the NCA, the National Credit Act, which is quite clear around when you should be granting credit and when it becomes reckless lending. And the truth of the matter is many of the applications we receive don't tick the boxes as per what the stipulated legislative parameters are. So that's the one. Secondly is there's another piece of legislation, which is Basel, which now talks to capital adequacy, which effectively talks to how much capital do we have to retain as banks for every 1 rand that we lend out. Because remember, because we operate in a very fragile environment, the systemic risk, effectively the risk of a lot of things falling through, is quite significant if banks were to fail. Remember, we use depositors' funds. It's not our money. So, believe it or not, as banks, I have to go to borrow money from someone who's deposited money and I need to pay that money back. And so those requirements also make it quite onerous on banks in the context of what the return on that capital ought to be. So from a pricing perspective, it also adds another layer of complexity. So in a nutshell, I think there are a number of discussions that must be had between public and private sector in the context of how do you then stimulate the economy by looking at the different segments. So, self-employed, small to medium enterprises relative to equally households. And then looking to say, well, we don't want to go back to where we were with the Usury Act pre the NCA, where there was massive outlay of capital, and a lot of people got themselves into deep trouble because everyone could get credit, but not everyone could pay the credit back, and a lot of people ended up in trouble. But also not on the other side of the continuum, where you're also unable to move. As an example, if you go into debt counseling, we're not allowed to give you a loan after that, right? Until you're fully rehabilitated. But you go into debt counseling to actually rehabilitate yourself. So now you almost see that this good deed you take ultimately ends up as a stain, if I can call it that, in how banks will then deal with you. So it's not a matter of, in COVID, as an example, we used the phrase and we said life happens, because the good people end up in tough situations. But now when you come out of that, it becomes very difficult to engage in terms of granting credit. So I can't defend the assertion you made. Definitely, there's a lot of individuals who apply daily, who in fairness want to pay you back, are able to pay you back, but for various reasons, either the disposable the disposable income to the asset ratio is out of kilt, or the repayment to income is out of kilt, or the balance sheet doesn't stack up. Because in some cases we also look to purchase next to what the Joneses park next door, the Mkhize's park, or the Shabalala's park. So sometimes people also look at okay, so listen, Kune G63, and then that's the first thing. We should actually be dealing with a different level brand. So I think there's also that education that has to come to the fore in just the relationship between our balance sheet as individuals, because all of us have balance sheets and all of us have got income statements. And so I think there's an education, regulatory issue, customer conduct issue, but then there's a broader issue, you're right, where banking in itself has got to be seen slightly differently. But I'm just not sure that you can have that discussion without having the Prudential Authority and the other regulatory bodies comfortable around how you democratize some of those pieces.
Yeah, so I get it, and I'm sure many of our colleagues who are on the line understands the position that you have laid out so eloquently. Obviously, if you look at the South African economy in the last couple of years, and we listen to economists every day, and I'm sure when you look at your numbers, you look at your trajectory, you look at your trends, the economy is not firing with all cylinders, if we use the pun within the auto sector. What are you beginning to see? I mean, have you seen a slump in terms of people who are qualifying to buy vehicles? At least from a naamsa point of view, we've seen a sharp decline in terms of new vehicle sales. I just want to get a sense from the bank side. Are you seeing the same trend as we see in terms of new vehicle sales, or are you seeing something completely different? And I also wanted you to speak very briefly about the areas that you are beginning to see in relation to the buying of brand new vehicles vis-a-vis second-hand or used vehicles. What are you beginning to see in those particular trends?
So I think it's important, Mike, if we are true to form, the explanation is that the economy is not firing, period. Never mind on all cylinders. Okay. If you look at GDP and you look at what the forecast numbers are, and where we need to be lending, just to be able to stimulate growth in the economy, the delta is significant. Okay, we're still kind of talking about a 0.9 to 1.1 range GDP. And to be fair, we would need to be firing anywhere between a 5 to 7% quite comfortably for at least a sustained period of time to ultimately outpace the growth in the population. Because remember, even the economy has got to be pumping for people in the current economy, but then there are people that are coming into the economy. And so then you start to talk about the income per capita, and you kind of start to look at where that is going. And then you start to look at measures such as the Gini coefficient, where you start to actually see that it's only the few that are becoming wealthy. But if you actually aggregate that, you've got a bigger problem, because the actual income disparity is playing out. The middle class is under massive pressure, massive pressure, because if you start to look at the nature and the shape of savings and the balance sheet went exceptionally well from kind of 2020, 2021, but you've seen a 475 basis points increase in interest rates that has been sustained for quite a long period of time, that is going to be high for a long period of time, that has started to dive right into consumer savings. On the back of that, you look at vehicle price inflation over the last 3 to 5 years. That has been quite significant. Now, I always make the example to say, you pay vehicle price inflation net of taxes. Your salary increases pre-tax. So even on a gross level, even if you were to receive at a gross level 6%, which is a good number in the context of where the market is, that's 6% pre-tax. Whatever your tax rate is, if you're trying to purchase a vehicle that has been on a CAGR basis, compounded annual growth rate of 30 to 40%, you can see that you're out of kilt. So to bring it back, consumers are under massive strain. They're going to be under massive strain for quite long periods of time, even with the expected interest rate reprieve that we are confident is on the cards in the second half. Now we are having a debate whether it's September after the Fed cuts, whether it's later on. The truth of the matter is, whether it's 25 or 50 basis points, still inadequate to get us out, but it's going to be great for sentiment. It's going to be great for giving some cash flow reprieve, and hopefully inflation is sustained for long periods of time, because that translates into real disposable income. We are seeing a lot more customers purchasing used vehicles. We are seeing a lot more customers purchasing Chinese brands, largely driven by the price point, largely driven by value for money. If you take the traditional old German brands and you look at where the prices are, for many people, when you say to them to buy a Polo GTI is 800,000, and then to purchase a Tigo 4 is 600,000. Then when people have to make those offsets, then you can see why some of the dynamics are changing in terms of the naamsa sales. So I think that will still remain a feature. You would know this better than me in terms of what's happening in that space. But our view of it is that for as long as we look at access into automotive or into mobility purely on installment sale finance structures, then the market is, if we are lucky, going to be flat or benign in growth, marginal. But I don't see the numbers exponentially shooting, to your upper kind of 600. I don't see it. And we can discuss the numbers ad nauseum and say, yeah, sure, there'll be new participants, and great, we've seen them. But new participants don't equal a growth in the market. So the demand side has remained pretty much the same. And we look at it on our applications. The demand side is, the supply is now kind of starting to normalize. Actually, even you can probably say in some cases, some dealers are a little bit overstocked. But we're not seeing the demand because of the factors that I spoke about. And lastly, if you go to the credit bureau, we track what we call PRISM scores, which is really the health of the customers. That's coming down every single day, because if you track it and you start to say you're getting a 6% increase, but then Eskom increases its tariffs by 12%. Okay, naturally we are becoming poorer as a society, and people are moving more into unsecured debt than just to survive, by the way, to survive. So a lot of that pressure is definitely coming through. So we expect that the market will remain under pressure for longer, and interest rates higher, even though they will come down. They will come down over the next 12 to 18 months, but they'll still be higher than where we were when we came into 2019. But you see, now you're making me sound like a banker,
Fantastic.
right? And I don't want to sound like a banker.
Yeah, absolutely. Yeah, absolutely. So keep those questions coming. I see, a number of questions have come through. I see Paseka has asked a few questions, which I'll get into very briefly. Ghana, before I go to Paseka's questions, I wanted to just get your thoughts around the fact that the industry is changing, and there are those like us who argue that the industry is going to change faster in the next 10 years than it has in the last 100. I would love to hear your thoughts around the EV space, generally speaking, because, and particularly in a country like South Africa, where you have, recently challenges like load shedding, where a lot of people were beginning to invest, for an example, in different power energy sources and so on and so forth, including solar systems. So if a customer is thinking, for an example, of buying a vehicle, which is an electric vehicle, are you as a bank beginning to recalibrate the way you finance, assets? And would you be keen, for an example, to provide a, let's call it, one-stop shop, turnkey solution where you've got a vehicle, you've got a solar cell system, and so on, as one big, asset that you can be able to finance through the same application? Or are you thinking and looking at it differently?
So, the quick answer to your question is, we are definitely challenging ourselves to have to reconfigure that calibration as to saying, how much do you front load of the customer's run costs into day one affordability? So they don't have to pay for fuel anymore. They don't have to necessarily take the vehicle in for a service, but most of them would have been on motor plan, etc. How much of that do you front load? But you can only front load that net of the increase in their other run costs. So you say you don't pay for fuel, but Eskom has also gone up at the same time. You don't only look at the one item in isolation. You've kind of got to understand the broader ecosystem. What we have done is we have at the very least started to, on the back of some of the credits we get from Treasury, discount pricing. Okay, so we've rebated rates on that. So customers are already seeing that. Now, because of the price point at which these what the so-called electric vehicles, which effectively are battery powered, right? So it's battery electric vehicles, really. That's what they are. It's more than it is. The price point at which they are coming in is they are coming in at the top end relative to ICE. And so when you then go back to the initial debate around the pressure on the income statement and on the balance sheet of those particular consumers, is that we are seeing that it's still a very significantly low percentage of individuals that are still kind of getting through to procure these vehicles. I mean, if I were to sit and look at, I mean, last year was what, sub 1,000 of the total 500 plus that was electric vehicles, sub 1,000. Of that, for financed deals was sub 300 on our book, sub 300. Yeah. So in the context of 500 plus thousand accounts, you can see the materiality factor. What worries us at the moment, I'll tell you, is the battery lifespan, is the pace of improvement in the tech and the implication of that on the residual value of the asset. Okay, so you purchase a vehicle in January 2023, the range is 500,000 kilometers. You purchase a vehicle on the 1st of January 2024, the range is 700,000 kilometers. What is the implication of that on the residual value in the instance of tradability and in the instance of default? So where we are grappling at the moment is not only the day one pricing and excess, but it's also recoverability of the asset in the event of this asset going bad or trading. Unfortunately, we don't have enough data points. Again, I say we are a data and a tech business. We are a data business because it is these data points that ultimately inform where we position ourselves in terms of how much capital we deploy, at what price point, such that we don't in any shape or form create earnings volatility in the portfolio.
Yeah. Okay, thanks very much, Tatem Sibi. I'm going to change gears and perhaps maybe go into some of the questions we have received on the chat. Paseka Letsatsi is asking, and I suppose it's one of the questions in the tech, and asking a question around fintechs, and asking, with the emergence of fintech who are after traditional bank clients, do you see that as an opportunity or a threat for your current traditional banks?
Most definitely. Most definitely. Fintechs come in with a very light cost base. They come in with, you could argue, the most advanced tech competing with us that have got very legacy tech. So now you must appreciate that. I mean, if you take FNB, it's 185 years. You've had to build systems over time. And banking systems have been built on very different architecture. What we call, at the moment, we say that these are tightly coupled. Historically, believe it or not, as outdated as our systems are today, they were best in class 20 years ago in the context of putting everything together. Now everything is running on APIs. There were no APIs then. If you're a fintech, you don't have that legacy issue. We call it legacy debt. And so they're definitely a lot more agile. They're a lot more better positioned to be able to, I suppose, be flexible in the context of the latest consumer expectations and wants. However, they don't have data. Okay, you must appreciate that fintechs don't have data. Number one. Yeah. Secondly, you must understand that fintechs don't have infrastructure. Now, we can talk about being a data and a tech business. The reality of the matter is that successful banking organizations require a very healthy balance between clicks and mortar businesses and bricks and mortar businesses. And so the ability to be able to still build that infrastructure or partner with someone for that infrastructure comes at a cost. They don't have strong balance sheets. And that is why you see many of them, even though they grow the client base, they're still not making profits. Banking is an annuity business. Banking is a blend business. So it's a blend between lend, transact, insure, and invest. You've got to work within those four pillars. You can't be strong on the one and be weak on the other. They don't necessarily have that. We see it with Discovery Bank. That's coming. We see Time Bank. We see they're great to kind of lend the clients, but then to be able to kind of get that to scale is something slightly different. Thirdly is the maturity of the solutions is still quite limited. So it's great to be able to provide someone with a check account. That's great. But then in banking, proper end-to-end banking suite of services, you have got very different needs. Today, you are traveling to a separate geography that requires you to transact in different currency. They don't necessarily always have forex capability. They don't necessarily have well plugged in invest solutions. So they definitely are a threat, but I think we've seen that there hasn't been as much a massive exodus of clients out of traditional banks into fintechs. If anything, we've seen people become more multi-banked than close those particular accounts. So you see people with 3 or 4 bank accounts for various reasons, because it satisfies something what they need. So I've got a Discovery card because it's great for Vitality. I've got FNB, it's good for e-bucks. But then I've got my Time Bank because it's great for this, etc. So I think that's what we are starting to see. We're starting to see a proliferation of cards in the wallet. But for spend purposes, we can still see that the traditional banks, especially from the credit card, still lead that particular charge.
Yeah. Okay, fantastic. I'm going to take another question from Jay Ramdani, who's asking that is asking a question also around tech business. So is technology really making lives of populace easier, population easier? Is it not just a mechanism to reduce corporate costs and remove the corporate even further away from the customer? Human interaction is less and less. What is your thought? So he's saying, we are now becoming too dependent on apps and on technology. We are no longer running into, a bank to withdraw money because we are transacting online and so on. What are your thoughts around that?
An interesting question Jay asks online. I'm surprised he didn't write me a letter to the post office so that I can go pick up the letter, read it, and then write back to him, and then we can finish this conversation quite efficiently. Do you see the point, right? Is that unfortunately or fortunately for us, the world around us has advanced, and the pace of Nino responses has far much more ramped up than when we first started. He's right. There's a cost issue. There's no question about that. But more than anything, there's a relevance issue. I'm not sure whether Jay still goes to Mr. Video to hire or they go to Netflix to download. And so the world around us has been disrupted. And the ability to be responsive immediately now more than ever is what distinguishes your credence in the particular value chain, but more importantly makes you relevant. And so I don't think it's about just cost. Yes, cost is critical so that you are able to streamline services, etc. But it's also important that you become efficient. That's why we are able to have this thing online, right? And then if we talk about the issue of customer, I've never been, and I'm quite convinced of this, I don't think tech replaces people. I think there's a healthy balance. But it's about getting people to perform value-adding activities. It's one thing to have people in a business and all they do is move something from point A to point B. That is not value-adding. However, if you start to get people to engage in understanding the data such that we can preempt what you're going to ask, and this is where people say, yeah, well, it's AI, etc. That's fantastic, but that stuff has got to be understood so that it's a lot more contextual. So I think human interaction is going to become more and more pivotal. And that's why in our business, we have not gone down a path of scale down people up tech. No, effectively, you've got to be able to scale the tech, this clicks and mortar, but you can't do away with the bricks and mortar. But at the same time, you've got to make sure that the people use tech as an enabler to be able to get the organization to far outpace itself from its peers. So I think going forward, we are forever going to, in my humble opinion, we are forever going to require people more than ever. We're going to need people to be empathetic. We're going to require people that are going to be human, but at the same time, we are going to require people that can respond to problems speedily. And that's where tech and data will definitely come into place, because if you're unable to solve somebody's problem, then you cause more consternation by being there, when they need an answer immediately. I hope I've answered Jay, but if not, he must look in the post box. I'll write a love note.
Okay, fantastic. Thank you very much, Ghana. I'm going to take maybe one or two last questions. One is from Winston Jordan from Gridcast. I'm sure you know him very well. He's asking whether will the bank not see an opportunity to finance a battery replacement in a second-hand EV if the battery warranty ends during the finance term?
So again, one thing about bankers is that we'll finance anything, right? As long as there is a market to aggregate demand and supply. What you find is that the expectation on how banks lead becomes where there's a distortion in the market, because you can't lead with finance when there is no prevailing market and market activity. And so when the market sets itself up to be able to improve tradability between exactly what Winston is talking about, which in my humble opinion is what we are going to need to deal with the lot of this angst on BEVs. And I think it starts to talk about range anxiety, talks about efficacy of having an EV, the time to, etc., etc. When that matures, when that infrastructure matures, when that topic matures in the context of SA Inc., most definitely banks will be there, I can almost assure you.
Yeah.
But what you are not going to find is banks leading by financing something that has not matured as a capability, because then the risk of loss is then significantly higher, because that market is not mature, if that makes sense. So the long and the short of it is, will banks do it? Most definitely. But the industry has to lead. The market has to be there. It has to be well aggregated, well understood, and then definitely banks will be there.
Okay, let's take the last one from Paseka again, Ghana, where he's asking whether, given the challenges you mentioned on customers being under pressure, do you see a growing trend for car rental, subscriptions, car sharing, financing vehicles over the year of 8? Or what are your thoughts there?
100%. I mean, Mike, I've been on many a podium stating that, in my humble opinion, the traditional way in which we finance cars, that's lived its shelf life. I'm convinced. And I suppose it talks to your question of the change over the next 10 years and the next 100 years. I think we've lived that shelf life, because you see, the pressure on the consumer is not about to turn. The kind of the activity in the market is still going to be something that I suppose we're going to need something special for a long time. Okay, now I'm not going to get into whether it's possible. Yes, I suppose policy and execution, but we're going to need something special. And so the truth of the matter is that for us to democratize access to mobility, we are going to need pay for use usage offerings. And by the way, I mean, I think we do have them in South Africa. I just think they're not mainstream. We've got them in the bank today. They're not mainstream because the reality is you're also dealing with an orientation in the country of customers that want to own an asset, or they truly believe that they own the asset even when they finance it. And so when you sometimes say to them, you rent the car, it has not been an offering that has equally been well accepted. But I think as more and more people start to fall adjacent to mainstream kind of approval processes, but I still need that car. Okay, then what we call off-balance sheet solutions, we effectively saying all I have is that's the expense, but I don't have the underlying liability on my balance sheet. Those will come more and more. But I think to be honest with you, and I see this. I mean, we run a program that it's a product as well. We call it a graduate finance product, and that is a good opportunity because those are normally your entry level guys that are coming in, and we try with those and we say, listen, don't go into installment sale, go into a lease solution so that you use the car for 3 years, bring the car back and move on. You can see the reluctance, man. It doesn't sound sexy. There's this thing about it's my car, I own it, etc. That I think as a population, as a consumer base, we have to reorientate our understanding of this entire process. But definitely he's right. I can't argue that.
Okay, fantastic, Ghana. Thank you very much. I'm going to wrap up, and I promised our young people that we are going to disclose your age today, and I have every intention to at least give you the right of refusal as you begin to encourage them, because I think I would like you to, your way to the top. I mean, what would you say to a young lady who's sitting at home today or at a lecture room today listening to you to say, one day I want to become a CEO of WesBank? What would you say to that young Black female postgraduate student who aspires to be where you are today, by starting first by giving us how old you are, Tatem Sibi?
I am a new model with very high mileage. I have been driven on gravel roads for far too long. And the bumpers are falling off, but I'm still within motor plane. No, look, I'm 41 this year. I'm 41. I know I look older. I'm turning gray, but it's a function of the problems I carry. So I'm 41 this year. And I mean, you ask a very pertinent question around, I suppose, career structuring. For many of us, and I'll speak for myself, the options were never really made as available to some of us when we went to school. I mean, you were either going to be a doctor, an accountant, a lawyer, etc. But those, I mean, I could have never told you growing up, how do you become a CEO? I think that's something that we must figure out. And I think when I opened up, I said to you, I see myself as a solutionist. And I think if someone says to me, I want to become a CEO, I would say to them, if you want to ever become a CEO, be able to live in the gray, but more importantly, be able to synthesize problems and synthesize issues, because you have to be able to understand the relationship and the knock-on implications of stuff in wherever industry you are in. So if you are in finance, you must understand the relationship between credit, between pricing, between collections, between the price of the car, between this. So yours is not just to understand this, but it's always to do this. Work horizontally. But working horizontally requires patience. Working horizontally requires humility, that you're going to have to do things that you may think in your brain, if you in your own brain, you may say, this is below me. It cannot be below you. It can never be, right?
Yeah.
Because that you have to appreciate the fact that you operate in an environment where, one, your role is not about you. Your role is about making sure that the environment is conducive for people to be the best they possibly can. You have to appreciate that when things come to you, 9 out of 10 times, and I always say to the team, it's because they are broken. So, if you are looking for congratulations, you're in the wrong job. You don't get hugs and thank you. When things work well, you don't get the invitation either. So just understand that, it's a self thingy. But then, but more importantly as well, I always say to people, when you are in an industry, spend time understanding it. Really understand what makes it tick, core and adjacent. And I think one advice I'll always give to people is discretionary energy and effort in really making sure that you extend yourself, your brand, as a collaborative brand. That's got nothing to do with qualification. Nothing. It's just got to do with the sacrifices and understanding the fact that you need people to be able to aid and lend you softly when things go wrong. And it's in that humility that I think you find that people are able to and are prepared to help. And as they help, the things you get involved in somehow work out. And as they work out, your profile, the runs on the board look better, and the runs on the board look better. You bring this, and then this whole thing synthesizes itself. Yeah. So I mean, I hope that advice helps. But yeah, I think it's just there isn't a linear. You don't do this, then this, then this, then this, then you're a CEO. No, it doesn't work like that.
Fantastic. I think that's the best place to end it for today. And the MCB once again, or should I say, 41-year-old MCB once again. Thank you very much for inspiring our young people. Thank you very much for sharing your thoughts, and thank you very much for sharing your insights and for educating us. Because I think even myself as NAMSA CEO, I can say that there are certain nuggets that you have empowered me with that I'm going to be taking away from this particular session. So thank you. Thank you once again for really indulging us and for making us the time to join us while you are on leave. So, thank you very much.
No, say thank you for the opportunity and the platform to at least share my story, and I hope that individuals can resonate with at least one or two pieces thereof. And I wish them all the best on their journeys. I wish you and the rest of the Automotive Council the best in igniting hope in the individuals, and hopefully from these discussions we can have a flood of individuals coming into the industry, because I think it really is a sexy industry. Thank you.
Fantastic. Thank you very much, Ntate.
Thank you, sir.
Okay, that was Ntate Ganam Sibi, the Chief Executive Officer of Westbank, one of our biggest financial services in the country, particularly for the automotive industry. In fact, they are a market leader in our sector. And I also want to take this time to thank all of those of you who have asked questions. I know that I didn't get to all the questions that were asked, but certainly we'll try and summarize those questions and forward them to Ghana so that he can be able to answer them. And I saw also on the chat that many of you are also asking questions around the first edition or first episode of the Masterclass that was under the brand Pretorius. And we will be packaging all these episodes and we'll be sharing with you each and every highlight on our website at an appropriate time. So keep on checking naamsa.co.za, where we'll certainly be able to share some of this information. Okay, the second half of this stanza of today's session, we're going to now change gears to some very, very exciting presentations from two amazing ladies who are on the line for today. I'm going to first introduce EY Chief Economist, Ms. Angelica Hollinger. Angelica is the Africa Chief, EY's Africa Chief Economist, and is an experienced in economics, analysis, and also in public policy. With a strong background in economic development strategies, Angelica has worked across various industries and has a deep understanding of economic risks and also opportunities. Prior to joining EY, almost 6 years ago now, she spent 9 years as the Economic Policy Division of the National Treasury, growing her expertise in economic development, network industry policy, and infrastructure investment. Angelica is also Africa representative for EY's Geostrategic Business Group, which focuses on geopolitical risks and also trends on how clients can navigate these. She holds a master's degree in econometrics from the University of Pretoria. Angelica's skills include analyzing global, regional, and also local economic trends, and also policy and regulatory analysis, including industrial and tax policy, economic diligence, and also assessing geopolitical and economic risks. Ladies and gentlemen, it gives me a lot great of pleasure to request Angelica to turn her, there she is, and to welcome her. Thank you very much, Angelica, for joining us. And I'm going to hand over to you to take us through your presentation.
Great. Thank you so much, Mr. Mombasa. It's such a pleasure to be here with you all today. And I'll be wearing my hat not as a chief economist today. I'll be wearing my hat as Africa representative for EY's Geostrategic Business Group. And as my slides pull up, I'm going to be essentially presenting the GB, we call ourselves the GBG, the GBG's outlook for 2024 on geopolitical risks. And really, this is, I know it's quite late in the year 2024, but still many of these risks are constantly evolving and are still with us. So it's still valuable to highlight these. And essentially what is classified as what is geostrategy. And essentially geostrategy is how organizations can manage their risks and opportunities that come out from geopolitical risks. And geopolitical risks really are these kind of global shifts in politics and how they can affect different sectors or different industries. And really, I mean, it's of course, very important, to highlight the risks, right? Because that, risks tend to cost businesses more, right? Can also, have negative impacts. So it's really important for businesses and organizations to be aware of some of the potential impacts of risks. But it's also not to kind of fearmonger anyone, right? Because if you're overly, cautious and scared about making decisions in the wake of geopolitical risks, you can also miss kind of key opportunities that present themselves in the market. And I think sort of a really nice example here actually comes from your industry. So, I'm sure most of you are aware of the Cold War, where essentially it was, Russia against the US. And there was this, huge tension globally, right? There's very little trade going on between countries, and there was a very, very tense sort of global geopolitical environment. But as the Cold War ended, many organizations were actually still very cautious about trading, about setting up, manufacturing facilities in different markets, because they still felt that war could spark at any moment. A global war could just spark. But Toyota actually, saw an opportunity here, right, to be a first mover. And they actually, they were actually a very small player outside of Japan, but they actually chose to embrace these changes as a result of the Cold War. And, under their new guiding principles as a company, they decided to actually follow through, with and kind of go with the times, right, and expand into luxury vehicles and making various investments across the world. And this actually really allowed Toyota to capitalize on this emerging global market, right? And what we saw, emerging into globalization. And this actually resulted in a huge increase in their overseas production and sales. And that really kind of shows the benefits of adapting and seeing geopolitical shifts and seeing, what are the opportunities that can come as a result of that. So as I said, it's not all doom and gloom. It's really around, there's risks, but they also can present opportunities. And so this is just to quickly highlight, doing this kind of broad global analysis is pretty impossible to do it without colleagues across the globe. So we really have our foot on every continent. And it's really just to highlight the team that kind of contributes to this work. And here I am at the bottom there. So really, just maybe going into this geostrategic outlook in a little bit in terms of the methodology. Really, we do this annually, and we're at the moment preparing our next edition. And it's really just looking at, we scan the market for what are the key risks emerging, but we also try to sorry, apologies, I'm a bit thick. We try to identify the risks that are high probability and high impact across various sectors and geographies. So this is what we focus on, because risks, there are numerous, but really try to focus ones that are the kind of top of mind. And we do, we source these risks from between us as the GBG, but also via various experts within our networks outside of EY, including academics and sort of and so on. And we track this, as I said, on an annual basis, but we also do monthly analysis on some of the risks that emerge. And we also see how these track relative to our outlook for the year. So let me just get into the geopolitical risks we've highlighted for 2024. I will go into a little bit more detail into the top three. I think that will be more relevant to your industry. But essentially, we've split these risks into those, or essentially there's two themes. Oh, apologies. Thank you for noting. Sorry, the slide's apparently not visible.
I can see it.
Okay, thanks, Georgina. Anyone else?
Yeah, maybe I'm going to ask our technical team just to double check. A lot of people can see it.
Okay,
but
great.
Just to make sure that everyone can see it. Thank you.
It does look like they kind of getting lots of thumbs up. Thank you. So the two kind of themes we're seeing for this year, and this has really actually come out in what we've seen in the news and on a daily basis. But the first one is multipolarity. And this is where essentially power, in the global, geopolitics is becoming much more dispersed. It's not these kind of East versus West alliances anymore, or, US versus Russia, right? There is a lot more dispersion between different blocks and alliance networks, right? And so we're seeing, in terms of multipolarity, emerging digital technologies are really kind of the primary driver of geopolitical competition, and we're seeing a lot of that come through with AI, right? Some of the regulations around AI, there's almost this race to get the most advanced AI. And we also see this multipolarity because there's these various blocks coming up. It's likely going to actually reinforce existing economic diversification trends. So what we're seeing, increased localization, bringing supply chains closer to home, closer to customers. And really it's highlighting the importance of having a resilient supply chain, right? And also this kind of multipolarity brings, also challenges in global policy coordination, right? Because, these various blocks might not necessarily see eye to eye on critical issues. For example, would it be, climate change or taxation or treatment of the digital economy, and aspects like that. So that kind of, increases various elements of uncertainty for businesses, right? The other kind of key trend is de-risking. And this is where governments essentially and firms are trying to basically push more industrial policy and kind of promote this greater domestic manufacturing of critical products. And so we're seeing this kind of coupling of economic policy with foreign and national security policies. It's actually becoming, they used to be quite distinct, but we're seeing this is really coming more aligned. So really governments are trying to reduce their dependency on other economies and really are prioritizing their national security, which can be quite broadly defined. And so we're seeing, for example, this is, AI again. This is quite key in terms of how governments are seeing kind of areas of risk. And and of course the one challenge, and a bit of my economist hat on, is around the fact that these heightened sort of global security policies could potentially enhance inflation, right? Because previously your supply chains might have been allocated on the basis of, cost and so on, but actually shifting markets and supply chains actually add on additional cost and can therefore increase inflation. And also touching to the next speaker's points around innovation, this kind of these national security policies can actually hinder innovation because governments and organizations are kind of less willing to share their IP in a way. And so we've really seen these kind of de-risking and multipolarity come through as we've expected. But yeah, here are essentially kind of the these top 10. I've covered most of them in here, but really it's so important that it's that business models adjust to kind of these risks and geopolitical events that could happen, right? But I'll go through into, as I said, into 3 of these kind of maybe the more relevant geopolitical risks, and kind of just being wary of time. So the first one, I think, particularly just wanted to focus. I think is quite important in discussing this a little bit more about this geopolitical multiverse, right? And we are just seeing this much more complex environment emerge. Yes, you've still got the great powers, right? US, EU, and China. We're seeing the tensions continue through there. I mean, most recently, the EU has been, has added on tariffs on Chinese electric vehicles to protect the local industry, and so on. So there's this tension here. But at the same time, we're seeing an interesting trend emerge where we call them the geopolitical swing states, right? So these are countries that are not totally aligned with a single bloc, and they're becoming much more important to overall geopolitics. So if you think about the Middle East, Saudi Arabia is becoming quite important in the geopolitical world. We've seen the BRICS trying to expand, right? Membership to grow these blocks. And it's quite interesting, and particularly countries who've got lots of resources in the energy value chain are likely to become much more influential. So coming back to Saudi Arabia, but also the African continent, right? And the African continent is when we are seeing this play out in terms of relationships between China and the US on the continent, which is quite interesting. And so we're seeing also a lot of smaller countries and sort of groups actually try and challenge the status quo in 2024. Seeing smaller countries and some of the challenges happening in Azerbaijan, in Venezuela, and the Houthis and Northern Africa. So we're seeing this kind of these major developments happen in the space. So we're seeing many more global actors. And that what really makes it is this has really highlighted the importance of geopolitics front of mind. Actually, we've seen a 600% increase in the mention of geopolitics and political risk in companies' public reports in 2022. And this is still elevated in 2023. So this is really kind of front of mind for businesses. And also this plays out in international organizations, right? So we're seeing this it kind of causes tensions, right, within these organizations. And, there could be you'll see the different coalitions emerge, right, depending on the issue at hand, right? So some countries might align on one issue, but not align on another, right? And this makes it incredibly complex, right? If you are a company operating in this space, it just makes it really, really difficult. And yes, some of these issues can emerge in terms of we could see increase in tariffs, like we mentioned. There could be potentially sanctions against specific governments. And also, so that could result in direct sort of loss of revenue. And also these kind of tensions or relationships can also result in quite, maybe not expected or not, seem to be direct effects that companies might have picked up. So actually kind of a real example of this is, during, Greece had a deep fiscal debt crisis, I think it was in 2000. And there was these massively contentious debt negotiations between Greece and the EU. And actually the German government really took a tough stance on Greece. And what was actually seen in that year is that German auto sales in Greece dropped by 15% over 12 months. So this, this is just a clear example of how this kind of seemingly unrelated geopolitical event, right, fiscal policy negotiations, right, between two governments can actually result in an impact in sales and revenues for companies in very profound ways. So just going on to the next one, so prioritizing economic security. And it really is going to result in more interventionist policies. And we are, this kind of de-risking was something we identified in the previous years, is that more and more countries are looking to localize their manufacturing, right? And we've actually, and this has resulted in a lot of, various kind of policies around trade and incentives and so on. And we actually, saw 180% increase in the number of trade interventions in the past 5 years. So this is really, really ramped up. And we're seeing economic security policies really focused on kind of 3 objectives. Firstly, reducing reliance on geopolitical competitors. So for example, the US wanting to reduce reliance on China, promoting local industry competitiveness, and also supporting local domestic socio-political stability. So that means, ensuring that local people have jobs, and so on, and kind of from that perspective. And so, we've seen a lot of this, as I said already, trade and industrial policies. So the US Inflation Reduction Act was really focused on localizing sort of green or supply chains within the US, and that resulted in massive shifts globally. And also particularly sectors that are seen to be much more strategic by governments are going to see bigger impacts. So the kind of highly strategic sectors are the ones, typically aerospace and defense, advanced digital technologies and data. So AI here, semiconductors, also really, really critical here. And we've seen this has almost always been in the news, right? Other areas which are maybe more traditionally strategic, right, is like critical infrastructure and energy. And there's this kind of continuous focus on the energy transition inputs and technologies. So like critical minerals, and then also, high capacity batteries, and of course, electric vehicles. So really seeing this combination of controls and incentives to promote domestic production, right? And then you also get emerging strategic sectors, which are essentially like healthcare and biotechnology and agriculture. Food and agriculture is also this, becoming quite a risk, particularly in the context of climate change and kind of uncertain weather patterns. So food supply will be, less certain as weather patterns shift and change, and that can also result in supply chain disruptions there. Yeah, so really, companies really need to think about their strategy in the context of supply chains. In terms of what are the likely events now to impact their supply chains, but also in the future, right? So think about, what events are likely to trigger supply chain disruptions, right? And prepare for that. Expect that there to be impacts on cross-border acquisitions, right? Because if suddenly, you're a company based in the US, for example, and you're looking to merge with a company based in China, then of course there's a lot more complexity around that, right? So that's, those are some of the risks. But on the other hand, this results in a lot of opportunities for the industries, right? Because there's tax breaks, subsidies, state guaranteed investments, and we really saw that in the US in terms of that market there. And then the next one I want to highlight is, really touching on this competition for commodities. And so I touched on the previous one, but largely this has got to do with sort of critical minerals, food, and water. And there's kind of intensity and competition for critical minerals. So we've already, particularly, ones that power, EV batteries, and just the broader energy transition. We've already seen 131% increase in the global production of rare earths in just 5 years. And China is likely to will retain its strategic position as the world's largest refiner, but it kind of results in this kind of, single throat to choke, challenge, right? So we're seeing, that there'll be, and we started seeing that already. There's some mineral-rich countries are trying to push more in terms of domestic value adding. So it's not all essentially shipped to China as part of the, more domestic, more international processing. So, and I did touch on in agricultural commodities, but I think we all felt it personally, right? Remember that wheat prices shot up, given, as a result of the war in Ukraine. Now we've also seen that in East Africa, they had some food challenges because of the drought and then flooding. And so we're kind of seeing, this is going to continue to be kind of a risk, with economies. So what can really, companies do? It's, assessing what is their access to renewable energy and water, from an input perspective, look at various investment opportunities, right? Diversify across the critical minerals value chain. And we are seeing that also in the auto sector, right? We're seeing sort of this growing understanding of the dependency of critical minerals in the auto industry. So, and then, yes, so maybe I just want to wrap up quickly. And there's a lot more to discuss, as you can imagine. So there's, with all of this, right, these risks I've highlighted and many others as well that I haven't highlighted, what can essentially governments do, right? And there are basically 3 no regrets options that that executives can do to help their companies thrive. And so the first one is really actually just thinking about geopolitical considerations and building these into your business models and strategies. In this era of profound change, right, it's important that, that geopolitics is actually integrated into corporate strategy at the highest level, right? And kind of weaving this in to everyday company decisions will actually result in a competitive advantage, right? The other kind of no regret option is to, continue to, consider, the supply chain strategy and how it needs to be adjusted to make it more resilient, right, to these geopolitical disruptions that are happening. And the third one is really thinking about sustainability strategies in this context. So, there's various, the government's approaches to policy regarding climate change and natural resources are going to affect companies across various aspects, right? And so executives at companies should really think about new policies and regulations and look out for signals, right, that these policies may evolve into the future as well. And overall, it's really around developing more strategic approaches to managing these and other political risks and kind of incorporating these into long-term strategies. So just to end off, as I said, there's so much more to unpack here. There's a little QR code there, which will take you to the Geostrategic Business Group's website. And there you would see access to our reports, this full report, our monthly updates. And also there's just recently, I think it's hot off the press, my colleagues, Courtney and Oliver actually published a book, Geostrategy by Design. It's available on Amazon, and it's an ebook as well. And it really kind of spells out in practical terms how businesses can actually incorporate geostrategic thinking into their everyday decisions and so on. So it's quite a practical guide around that. So with that is my story. Thank you.
Fantastic. Thank you very much, Angelica, for that very informative session. And I'm sure that in the Q&A, a lot of questions I'm anticipating would obviously come to look at how do we then link these geopolitical risks that you've shared with us, and bring them home to the South African context. Because I would be keen to know, for an example, your thoughts around AGOA, your thoughts around, our own, GNU that we have constructed in the country. What are your thoughts there? And then, of course, your thoughts around, the South African current foreign policy, because we're currently doing business with BRICS on the one hand, we're hosting G20 next year, and some of these partners are not necessarily, seeing eye to eye. They're imposing tariffs on each other and so on. And South Africa finds itself in the middle, on the one hand with China, Russia, India, and so on, and then on the other hand with the West. So I would love to hear your thoughts on that. But before we go there, I would like to then switch gears and introduce our next speaker, Georgina Del Filcirio Nagy. I know, Georgina, that I have probably did not do justice to your surname. Georgina is going to be talking to us about the managing innovation and scaling emerging business model in the automotive industry. Just very briefly, Georgina is also a partner at EY Strategy, working on strategy, innovation, and digital projects. She is obviously an innovation framework designer. Georgina has also broad experience in innovation strategy and process development, and has designed and mobilized innovation capabilities within large, complex organizations. She brings a very vast experience in conducting digital disruption assessments, defining disruptive and transformative trends, and also impacts driven by digital revolution across different sectors. Georgina is also currently leading the BCX Digital Innovation Index, which aims to uncover the innovation practices of South Africa's largest organization. Georgina, I'm going to ask you by first helping me to pronounce your surname, because I know I pronounced your surname in Tsonga, so I want you to help me to pronounce it properly so that I don't butcher it next time.
It is a mouthful. It's De Filcirio Nagy. It took me a long time as a little girl to learn how to say it and spell it.
Yeah, no, I wouldn't get it right. I mean, in Tsonga, it's going to be very difficult. Over to you, Georgina.
Thank you. Let me get my slides up. And hello, everyone. It's great to be with you all today and share EY's perspectives on innovation. So we have defined and refined our perspectives through our work with many businesses in the development of their innovation and growth strategies. We've worked with lots of large organizations across sectors in doing this. And what we find is that these perspectives are generally applicable across all sectors. So I'll speak at a sort of broader, more general level at first, and then dive sort of more deeply into the auto sector. And what we're seeing is that from all businesses, there is an increasing need for support in how to transform and innovate to navigate this changing environment. I mean, we heard from Ghana and Angelica just how much change is all around us, and it's often an innovation where you can really drive growth and navigate those uncertain times. So that's why it's so important, especially now. And I mean, I think these perspectives are helpful to share no matter what size your business is, and whether you're still to enter the business world. Because if you understand the priorities and challenges of how large organizations or how they're going about innovation, then you're able to better understand how you might work together with businesses to solve those challenges. So I suppose one of the key things we've learned in working with businesses is that innovation is hard, and initiatives often fail. So it's a very difficult thing to achieve, and what's really important is to create a structure around an innovation capability and put various building blocks in place to support innovation. And what I'm going to do is take you through what we think those building blocks are that give you the best chance of success to succeed in innovation efforts. And I'd also like to then share some of our latest research. Michael shared that I've been working on a new piece of research with BCX that looks at how South African businesses are pursuing innovation and some of the challenges and accelerators that they experience in the local context. And I'd like to share some of those insights with you. But before we do that, I think it's always important to just align on what we mean by innovation. Lots of people define innovation in different ways. So I've got a few definitions up there on the screen. But what's important to highlight here is that we don't see innovation as just a once-off event or a new product or a new process. It's more about a journey and a capability, an ongoing capability. So it requires a structured effort if you're really going to achieve success in innovation. And also that we define it quite broadly. So highlighted in green there, how we like to define innovation is a new idea or invention that creates a new or transforms an existing product, service, or business model, and that creates tangible value for your organization or for which customers will pay. So it's more than just a product or service. We're looking at also the creation of completely new businesses and not just a short-term or incremental improvement, but also long-term transformation. So I mentioned that innovation is hard, and when we engage organizations, what we often find is the following symptoms in showing that innovation might fail or it's just really hard to achieve. So what we often see is that there may be pockets of innovation excellence in an organization, but that's quite fragmented. So different parts of the business or different teams might be pursuing their own innovation programs, but there's no alignment to an overarching strategy, and they're all going in quite different directions. It's quite common to see that it's hard to really progress or move quickly and achieve speed to market. It can take a really long time to achieve scale. Or they're misaligned governance approaches. We often find people are over-investing in innovation efforts and really struggling to see a return on investment. And they're spending a lot of time and effort, but it's not really leading to big value. And then also, there are often resource challenges. So there, really struggles with the right skills and capabilities to achieve innovation, or there's just sort of a low risk mindset. So that really challenges testing and failing to achieve innovation. And really the solution to this, and I'll take you through what we think the building blocks are, but those building blocks really speak to having a clear goal or strategy for your innovation efforts, having a really structured process around how you're going to drive innovation, having unique governance and funding models, because innovation projects are very different to sort of traditional business as usual projects, and that it's important to invest in this being a business-wide capability that's focused on innovation. It's really about creating a culture of innovation in an organization if you're really going to have the best chance of success. So let me take you through what we think the building blocks of innovation are. And if you have these elements in place, then you've got the best chance of producing some great innovative solutions. So the first is to have a very clear definition of innovation. You see, I started out with our definition of innovation, but for different size organizations, you might have, and dependent on what you're going through, you might want your innovation efforts to have quite a specific focus. So you might want to be focused more on incremental, shorter-term innovations on your internal operations, or you might want to be really looking for the next big business idea in adjacent markets to really transform your business. So it's important to define what type of innovation you're focused on, and then you can align your efforts best towards that. Also important is to have an innovation strategy in place, and that's going to define how you're going to go about achieving the type of innovation that you're focused on. So, do you want that innovation to emerge organically within your organization? Because, then that's going to define, Do you have teams throughout the organization focused on innovation? Or are you rather just partnering with external innovation hubs and accelerators to try find innovative solutions? A nice tool that we think is really important in helping scope your innovation strategy and definition is to create an innovation thesis. This is like an investment firm might call it an investment thesis, but it's really providing the boundaries of where you'd like to innovate. So we would do quite a bit of research into, okay, well, where do we think the industry is going? Where do we think the world's going? What are the scenarios that might outline what our future is going to look like? And then, so where do we think there might be opportunities for us to explore? So Angelica's geopolitical perspectives would be important to bring in here. And then we started to think about, okay, well, what's really, where are we going to focus our efforts? I mean, in that thesis, you might say, okay, we're quite interested in, we think EV is going to be really big in the future, and we should actually start thinking about where our business is going to play in that future. You might say, we don't think flying cars is a thing, so that's definitely out of scope, but at least it's a silly example, but it's providing you the parameters so that people have a bit of direction for the world that they're looking for new solutions within. Once we've got those three building blocks clear, then it's very important to have an innovation journey mapped out. And that innovation journey or innovation process describes where you think you're going to get ideas from, how you're going to funnel them into the process, how do you prioritize those ideas, how do you assign resources to them, how do you break down those ideas and start playing around with them and say, okay, well, what's going to really be a viable new product or business? And then once those are tested and experimented on, how do you scale those across the business? So that's a really important element, because it's very different. An innovation journey is very different to a traditional project management process. Also, looking at your operating model for innovation is important. So this is where you're thinking through, how are we going to drive innovation within the organization? So are we going to have a team fully dedicated and focused on innovation? Or are we going to build our own sort of innovation hub and different teams in the business come and work within that? Do we have do we work with organizations completely outside of the organization to rely on our innovation? And maybe some of our teams work with them a bit. There are many different models that all have different advantages and disadvantages, but what's going to be the best way given the nature of your own organization? We also like to mention that community is important. So to think through what we mean community is here, there are different types of communities within an organization and externally to an organization. So there might be champions of innovation within your business that you can leverage, and then sort of skill sets outside that, all those different communities and stakeholders should be working together to bring in really interesting ideas into the organization. Then the last three building blocks are very important. So funding and governance. It's important here to have a unique approach to your traditional business projects. And that's because innovation initiatives often require more venture capital style funding approach, not traditional funding metrics and not traditional funding measures, because that can kill innovation ideas. The process of testing and exploring a new idea, which is a very uncertain process, doesn't align well to traditional project metrics and traditional funding approaches that require a lot of certainty. You can't always be assured of what's the return on investment going to be. So you've got to be able to convince leadership and that, you need to an iterative funding style, so that as you start to show promise and test and explore an idea, you're getting sort of small increments of funding to pursue that. And same with the traditional sort of project success metrics. That's quite different for an innovation project. And if you don't have unique innovation metrics in place, then it's going to be hard to show value or progress if you're using traditional project metrics. Portfolio prioritization and management. So we're talking about a portfolio of projects here. This is important to have a view of, because this might define all the different efforts, your innovation efforts on the go. And it's, you know, some of those ideas might be focused on really out there ideas for a completely new future business. Some might be focused more on your existing operations and looking for internally improvements in your internal environment. And it's important to just keep track of all the different innovation efforts on the go, how they're aligning to your group strategy, what the split is between those more incremental projects focused on improving your current business to the more out there ideas. So you can check, you know, where's the sort of balance of your investing. Playbooks are also a great tool to have in place, especially here if you want a lot of the organization involved in your innovation efforts, because the innovation playbook, it's a nice thing to have, because it really then outlines, if you've clearly defined all the other building blocks, the playbook would outline that, say, okay, if you're looking to explore a new idea, here's the innovation process that you should follow. This is the best way to govern and manage a project. This is the best way to fund these type of projects. And it's just a great way to then build innovation skills across the organization. And then what's very important is the type of skill sets and the way of working for innovation initiatives. So all these building blocks are underpinned by visual and creative thinking and design thinking and agile ways of working. Those are the critical skills in being able to deliver on innovation initiatives. And that's all, those ways of working are all built into your innovation journey and governance and funding mechanisms and operating model. So those are the building blocks of innovation that we see. If you've got those in place, then you really are set up with the best chance of success, and you should address all those symptoms that I went through that might resonate with you. That should address all those challenges that we see large organizations experiencing when they're innovating. I'd like to quickly share a view. So this is the research that I was mentioning. So we, together with BCX, we engaged the South African market, because, you know, a lot of what I've shared there is sort of global innovation theory, but we wanted to understand how are South African organizations pursuing innovation, and what about the local market context might be challenging or different, and what are the unique opportunities that we might experience. So we engaged really big business in South Africa across all the sectors. You can see the profile of organizations there. We engaged with the leaders of those organizations to understand how they were going about innovation, how mature they were in their journey, and we ranked them from excellent to nascent. You can go look at the report. You can really explore what the different organizations are doing and where they're located on this maturity scale. But what I wanted to highlight is some of what we thought was particularly interesting is how South African organizations are pursuing innovation and what are some of their biggest challenges. So what we've seen from this, this was launched last year. We just about to release the latest year's report that's coming in the next 3 weeks. But what we saw is that innovation really is a strategic priority for businesses in South Africa. We assessed organizations across all those building blocks that I shared, and most organizations have an innovation strategy or have innovation as a key pillar in their group strategy. Where they're falling short is actually having the investment linked to that strategy. So lots of organizations found it was really hard to then take an idea to leadership within the business and say, okay, we need the funding to now explore this. We have, by the way, seen a slight improvement in that area this year. And then another really big challenge is that many organizations just have an aversion to risk, and experimenting with an idea that you're not sure is going to be successful often hinders efforts. And so we really encourage that within the culture of an organization, giving people the freedom to test and explore and fail if they need to on an initiative, because you get great learnings from that for your next idea. External partnerships we found are really key in driving innovation. I mean, in your sector, you've got quite long value chains and quite complex value chains of many different types of players. There are so many opportunities for working with different types of organizations to work together and collaborate on an innovation idea. And then locally, there's a big challenge is the shortage of innovation talent. And that's not just purely innovation skills, that's also digital skills that we found. The biggest drivers of innovation locally we saw are changing consumer behaviors and expectations. I think Ghana mentioned this as well, and in your industry, I mean, it's driving a lot of innovative solutions such as rental options or subscription options. The demand for sort of greener solutions is also making us consider, okay, well, what does the future of EV look like? We've also heard from Angelica, emerging tech is becoming more accessible. So organizations, whether it's to improve their own internal operations or if it's to actually be able to create a completely new solution for customers and a way of engaging customers, that's a very big driver of any ideas or innovations that are emerging. And then another key one is the emergence of disruptive players or business models in industry or lateral industries. We're also seeing lots, one industry is learning from what is happening in another industry, or the boundaries between industries are changing. In the external environment, we explored what are some of the enablers or inhibitors that organizations are experiencing. Enablers, as I've mentioned, is working with partners or other service providers is a great way to overcome skills gaps. Working with startups and the innovation ecosystem is a great way to get in new ideas. And some of the biggest challenges there is access to talent in the regulatory landscape. And I think that's something that the sector experiences too. I'll quickly, Michael, give a view of emerging tech that people are interested in. You'll see AI is really the big bubbles there. And Angelica highlighted that as well. This is the areas that people are most interested in exploring, but of course it takes time to really think through what might those use cases be and how might our business change. That's a journey to go on. And quickly to just end on a view of what some of the results were for your sector in the last report. The biggest challenges experienced were in access to talent and retaining talent. And so that's why those partnerships become so important across the industry. And the biggest driver of innovation being transformation of supply chains and distribution networks. And a lot of that is impacted by the pandemic, these geopolitical forces of change that's impacting everyone in the world, conflict, and so managing costs and supply chain disruptions is something that's really important to balance, and that's again opportunity for, okay, well then how do we create new value if we've got these extra pressures? So the next report is coming out next month. These are some of the insights for your sector that I've just pulled out a sneak peek for you. But I think keep an eye out for this report to really have a good read through what some of the emerging results are. And within that, it's also lessons on how to deal with some of these challenges and improve maturity in pursuing innovation. I think probably the easiest way to look out for this report is if you follow me or connect with me on LinkedIn. And as soon as it's launched, I'll share it across that channel, so you can get access to the past and upcoming report that really delves into all the detail of this. Okay.
Okay,
Had to speed up there
fantastic.
fast.
Thank you. Yeah, no, fantastic. Thank you very much, Georgina, and Angelica, for very, very insightful two presentations. I was beginning to stress a bit that we may not have enough time to give people an opportunity to ask you difficult questions. But I'm seeing questions are already beginning to come through. So and I think let's go straight into it. So there's a question for you, Angelica. Would you say it's a good idea for SA to take a lead from EU and the US on how it reacts to geopolitical issues? For an example, after the US-EU imposed duty increases on China's EVs, should SA, for an example, use that to react to increases in Chinese vehicle imports in South Africa? What are your thoughts there?
Very, very interesting question. I guess you've always got to consider the context, right? The EU and the US are the world's biggest economies, right, combined. So I think, in terms of the bigger scheme of things, South Africa is relatively a small player. So, in terms of that impact, yeah, because, there might be less so. But I guess that's also, and I think South Africa really squarely sits in those middle powers, right? In those in this multipolar space. And I think, coming to your point, Michael, earlier around, what's happening with AGOA and sort of our foreign policy and so on, it is quite beneficial to actually be in those middle powers, right? Because you can essentially, take a back seat and see which outcome is more beneficial for you specifically as a country. So I think it's quite good, I think, to kind of be on the sidelines and kind of pick and choose when you want to sort of take a line. So I think it does offer opportunities for us, being a middle power essentially.
Yeah. Okay, fantastic. Thank you very much. That's very helpful. I also wanted to hear your thoughts while we're still on this middle power dynamics South Africa finds itself in. Maybe for you to just reflect on the fact that we are hosting the G20 next year. What are the things that, in your mind, are going to feature quite very strongly in those conversations, particularly taking into account all these different challenges that the world is seeing today, whether it is the war in Ukraine, and I'm sure by that time, we're not sure even whether Donald Trump will be the president of the US or it will be Kamala Harris. What are your thoughts in terms of what will be front and center in that agenda for the G20 next year?
Exactly. I think it's South Africa's first time hosting the G20, so it's going to be quite an amazing event. So South Africa's hosting the G20 takes over the presidency from November 2024 until November next year. And throughout that whole year, right, there'll be lots of events happening around the sideline. There are, in terms of the G20, there are very specific program items that almost have to be on the agenda and have to be discussed at every G20. There's the sort of financial, fiscal policy stream, right? And sort of governments connect around sort of economic and fiscal issues. And within that, there's tax, come in. And I imagine the carbon tax will feature heavily there. And there's elements about, how nations deal with each other. So yeah, I mean, these issues, of course, as you're saying, Michael, this is a very fluid environment, but definitely I think sustainability will still be on the agenda. And also this is the opportunity for South Africa and South African firms to also profile themselves with the G20. So it also helps, it's also around positioning ourselves, what we want to talk about as well. So I think it's really around So South Africa's place in the world, our diverse economy, showcasing that, showcasing the movements we've made in our energy sector and so on. So I think it's a really, really great opportunity for us. So it's not just a government to government thing, that it really, you see the private sector playing very strongly in that. So I definitely think, so I'm just advising everyone to kind of, keep abreast of this, and it's really, it helps us position ourselves in this global world.
Fantastic. Thank you very much. Georgina, there's a question around how do you bring in ESGs when you consider strategies around innovation? Does that take ESGs into account when you calibrate your strategies around innovation? And that question comes from Sandy Lenzwan.
Absolutely. It's top of mind for customers, for business. I mean, that perspective certainly has to be brought in, and it comes in from many angles, right? So if you're trying to understand how to better serve your customers, that's going to be when you're considering what their preferences and needs are for a particular experience or product or service of yours. You might be needing to explore, okay, well, how do we make a product have a greener or less impact on the environment? If we are looking at our own operations, we're considering our own impacts on communities and the environment, and our own way of governing and reporting on our own operations. There's so many different perspectives that this theme impacts, whether it's internally your own business or in the way that you're engaging the market, and whether you're going to be relevant in future. So it's one of those key themes that would be probably outlined in that innovation thesis that I mentioned, because that's a key consideration in the future in all businesses' futures.
Your thoughts about artificial intelligence. I think it's a very topical issue today globally, and how regulators in particular look at artificial intelligence and how that should be regulated. I mean, even on MS Teams today, when you walk into certain meetings, you find people already are inviting some AI to record the meetings and so on. What are your thoughts there about artificial intelligence and how that could be managed in a manner that it does not impact on people's privacy and also, confidentiality of information?
Big questions. I mean, questions on AI always are. I think, I mean, when we're looking at pursuing innovation, it's also one of the big themes, right? And why it's so important to be running that through an innovation capability, and if a capability is designed in the way that I outlined there, is because it's such an uncertain thing for so many people still. How's it going to impact our lives? How's it going to impact business? And what are the use cases going to be like? And it's exactly taking that through an innovation process that we're exploring what the change is going to be and how we're going to use it beneficially for ourselves or our business. So it's still, so much of it is still very much in, okay, what are the applications for ourselves? What are the applications for the business? It's through that innovation process that you're exploring that. And thinking about, okay, testing use cases of it. What would we like to scale through our organization? What's the impact going to be? It's that innovation process becomes especially important when exploring the AI topic.
Okay, I'm very sad that we've run out of time, and I was hoping we could do and explore some additional questions. I see a few other questions coming through, which we will unfortunately not be able to go through for today. I want to take this time once again to thank you both for making the time to join us. Your presentation was absolutely empowering and very, very informative. So thank you both for making the time and for joining us this morning. Thank you very much. Ladies and gentlemen, this brings us to the end of today's episode of the Masterclass. Once again, thank you very much for making the time to join us. We are truly grateful for the time off that you have made to join us. Our next masterclass is going to be on the 22nd of August, same time, same place, and we look forward to seeing you again. And tell your friends, tell your colleagues, tell also those who may be aspiring to join the automotive industry in the future to come and join us for the next masterclass. With that, thank you very much. The masterclass is adjourned. Thank you.